I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. We came into this Friday with a clear signal from the RSAI this morning. I told you the volatility term structure was sitting in strong contango, the kind that rewards patience and mean reversion. I said watch how the market digested that hotter than expected jobs number from earlier, how policy friction from the tariff ruling would ripple through, and how the Middle East noise refused to boil over into a real breakout. Well, folks, that's exactly what we got. The day opened with the S&P grinding in a tight band. No fireworks at the bell. Just that quiet, almost stubborn resilience we've seen so much of lately. By midday, the tape had absorbed the latest round of mixed earnings beats. Some names in tech and specialty credit popped hard on their own stories, while the broad index refused to budge more than a whisper. Remember what I said this morning about ignoring the binary headlines? The market listened to itself instead of the noise. It closed virtually flat, a hair under where it opened, the kind of session that feels uneventful until you realize how many traps it quietly disarmed. You could almost hear the collective exhale as the clock ticked toward the close. The VIX, which had been flirting higher earlier in the week on all that Hormuz drama and ceasefire uncertainty, settled back down. That decline is exactly what our methodology loves. This morning I reminded everyone that when the fear gauge eases while the term structure stays in contango, our iron condors get to do what they were built for. And today they did. Now let's talk about the traps that fired, or rather, the ones that didn't quite hook their prey this time. All week long, the financial media kept pounding the table with bearish opinion pieces, headlines screaming that the S&P had broken major support, that another 10% decline was coming, that sell signs were everywhere. You know the drill. They take one wiggly chart line, blow it up on television, and suddenly retail traders are convinced the sky is falling. Today was no different. Those same outlets were out in force this afternoon, pushing fear right as the court ruling on the tariffs hit the wires. But here's what they don't tell you. While they were busy scaring grandmas out of their index funds, the big money was doing what it always does, quietly harvesting premium in the options market, trimming just enough beta to stay safe, and letting the noise create exactly the volatility surface we monetize. That's the Wall Street playbook, folks. Create the fear, trade against the fear, and repeat. We saw it in the selective strength, too. Certain REITs and credit names posted solid guidance raises. Tech had its usual rotation, where a couple of standouts lifted the sector while the broader averages went nowhere. Bitcoin held near that psychological level without exploding or collapsing. All of it painted a picture of contained risk, yet the fear merchants kept trying to manufacture a breakdown. Our community didn't fall for it. You didn't fall for it. Because you understand something most retail traders never learn. These setups are designed to prey on emotion. The fragility curve is real. The bigger the narrative gets, the more stress it creates, until something breaks. Today nothing broke. The range held. The premium was there. And once again, our methodology proved why we built it this way. So what worked? What did we learn on this Friday close? Our iron condors sat right in the sweet spot all day. They didn't have to sweat any late surges or surprise breakdowns. The RSAI delivered clean signals. The EDR ranges respected the levels we needed, and that forward-looking volatility compression we talked about this morning showed up right on schedule. This was a textbook place day. Conservative and balanced tiers, both active, exactly as the engine called for. Aggressive stayed on the sidelines where it belonged. We also saw the temporal theta shift kick in at the right moment. With the EDR reading where it was, and the VIX still above 16, we rolled forward to capture that extra vega while keeping the position fresh. That's the beauty of the system. It doesn't sit there hoping for the best. It adapts with math and discipline. And yes, all three layers of the ALVH remained on watch. Even on a quiet close like this, those hedges are earning their keep in the background. 1 to 2% of account value a year for the kind of protection that can offset 30 to 50% of the pain in a real 10% plus drop. That's not speculation, that's engineered defense. The biggest lesson from today is the same one we've been living all week. When you strip away the headlines, when you ignore the doom loops on television, the market is telling us it's in a regime of selective strength inside contained ranges. The jobs data reminded everyone the Fed isn't riding to the rescue with easy money anytime soon. The tariff court ruling added a fresh layer of policy uncertainty that will probably keep volatility bids alive for a while. The fragile Middle East ceasefire held together just enough to prevent an oil spike. All of it added up to exactly the kind of environment where disciplined iron condor traders thrive. Zoom out with me for a second. This was a week that started with real geopolitical tension in the Strait of Hormuz. We had unusual oil bets, food prices hitting multi-year highs, and plenty of reasons for the fear gauge to run away. Yet here we are on Friday close, with the S&P basically where it started, the VIX declining, and our community collecting premium on 4 out of 5 trading days. That's not luck. That's methodology meeting reality. The smart money spent the week harvesting volatility, while retail bounced between panic and FOMO. Jane Street's record quarter on vol and AI exposure didn't happen by accident. Those prop desks understand contango the same way we do. They just don't publish a podcast about it. We saw selective corporate resilience too. Earnings beats in data, healthcare, and specialty credit showed that not every part of the economy is waiting on Washington. Onshoring stories keep quietly advancing. Even with all the tariff noise, supply chains are adjusting. That's the bigger picture the headlines miss. Policy friction creates noise. Real businesses create value. Our job is to stay between the noise and the value, right in that premium sweet spot. And tomorrow? Well, it's the weekend, but markets never really sleep. We'll be watching whether that 3-day Russia-Ukraine truce announced this week turns into anything real or was just a Victory Day headline grab. We'll watch if the tariff ruling sparks any appeals or retaliatory moves that could wake up the VIX over the next 48 hours. China and Iran sanctions talk ahead of the Trump-Xi meeting could create overnight surprises. And of course, we'll keep eyes on Bitcoin holding that psychological level, because when it moves, the risk on tone often spills into equities by Monday. This is the time to reflect on the week, not to chase. We placed trades on 4 of the 5 days. The RSA kept us on the right side of the tape. The iron condors did their job. Some expired worthless for full credit. The methodology delivered exactly what it was designed to deliver. That's how you build real edge over time. Not by being right every day, by being disciplined every day. And that's why we built this community. Because while everyone else is yelling at each other on television about who's winning and who's losing, we're over here executing a repeatable process that turns uncertainty into income. We see the traps before they spring. We respect the math when the emotion gets loud. We protect capital first, then we harvest premium. That's the VixShield way. That's our edge, and every single one of you who follows the signals instead of the screaming headlines. You're part of it. Be sure to listen for any breaking news from Miss Vicky over the weekend. She'll keep the flashes coming if anything moves the needle. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.